Hello everybody, let's talk a little bit. We just finished the first half of the year with a negative 21% of the S&P 500, and this is literally the worst first half of the last 50 freaking years from 1970 that you could have possibly been trading. So what do? The entire world is ending and the big bad stock market is taking a bite out your ass. What exactly are you supposed to do to overcome, to maintain, and to keep chugging on forward? Do you quit? Do you sell? Do you sit on the sidelines? And to be honest, that's a decision that you need to take. In my personal opinion, I'll save it until the end of the video to try to clickbait you a little bit longer to keep watching this video. But in all honesty, let's go over some data as I always like to do. Besides for the first half a year being done, quarter two is done in many ways, shapes, and form. First and foremost, quarter two of GDP is done. And now we're going to get results for quarter two in this quarter, quarter three. I think results come out at the end of September, if I'm not mistaken. What is a recession? A recession is technically two negative GDPs for 2 quarters. Currently, we had 1.6 negative in quarter one. We probably have a negative quarter now. Most economists, most experts, most hedge funds, and even this Jim Cramer clown is starting to talk about, oh, we're probably in a recession. We're probably in a recession. I've been saying it on this channel for quite a while that we're currently in a recession. How severe or how smooth this recession is going to go, that's still to be seen. But almost certainly we are currently in a recession, and we're only going to find out about this in a couple of months. Besides for GDP ending this quarter, besides for half a year ending, we also just finished quarter two for earnings. The earnings for quarter two are going to come out at the end of July and for around 2 weeks towards the middle of August. Earnings for all your favorite tech companies, Palantir, Nvidia, Unity, Tesla, so on and so forth. We're going to see how they fared during this last quarter. It's very important to see if we're going to have a PE recession, or we're going to have a PE neutral, or we're going to have a PE boom. I don't think we're going to have a PE boom. I think some companies are going to have a PE recession. What exactly is a PE? PE stands for price to earnings, and that just means the price of shares compared to the amount of earnings that your company is making. And then you multiply that to get a share price for your company. Some companies trade at a higher multiple, some companies trade at a lower multiple, and one of the few ways that you can compare how much a company is worth, you try to compare it to some other companies within the same exact field with similar PE ratios that do the same thing as your company does. But that's a different story. So now everyone's worried to see if the PEs are going to go down right now. Why? There's a couple of things that can increase your profitability and can increase your earnings. There's also a couple of things that can reduce your profitability and reduce your earnings. Number one is how much business you actually do, whether you increase your business or whether you decrease your business. That's one way. Now you would say, but Adam, isn't that the only way to see if you're making money or not? Isn't that the only thing that's gonna affect your earnings? Yes and no. The second thing is, besides for quantity, quality, or profits, your profit margin. With inflation right now, and this is the main concern right now, we're scared that even if you're doing the same business, you're still selling that 100 units, right? You sold 100 units last quarter. This quarter, you sold another 100 units. You would assume you're making the same money. However, your earnings could be diminished if your profit margins also get reduced. What exactly would reduce your profit margins? Inflation would reduce your profit margins. There's several ways for inflation to reduce your profit margins. I'll just mention a couple of them. Let's say you are Walmart, for example. You have a lot of shipping costs. The shipping costs are increased due to gas prices, whether you use your own vendors like Walmart truckers or you use open market truckers. Just to give you one small example. Your employees, whichever company you are. I made a video before about the price wage spiral, where no matter how much inflation goes up, your employees are always going to ask for more money. As they ask for more money, you charge more money, and then you raise your prices. As you raise your prices, employees ask for more money, so on and so forth, which eats into your profit margins as well. Every single time somebody takes sick leave and you have to pay them during coronavirus, this eats into your profit margins. So what ends up happening is the amount that you're making, your margins shrink. And even if you're doing the same quantity, you're going to make less earnings, which is going to affect your PE, which is going to affect your share price. And this is what people talk about, PE recession. You might have heard the term. Another thing that can possibly affect your PE right now is your bottom line. When you lend money and you're in an inflationary situation like we are right now, interest rates go up. That's what they mean by the federal rate hikes. As interest rates go up and you need to borrow money or you need to invest in your company and you don't have money, you need to get it from somewhere. How does that work? You borrow, and the more you have to pay back as you borrow money, the more expensive money becomes. That also eats into your profit margin, your bottom line, because it costs you that much more in order to do the same exact thing. Whatever that thing is, it eats into your profit margins, and this is why people hate inflation, and this is why people hate Wall Street, specifically growth companies, because a lot of growth companies, they're not profitable, and the money that they have, they reinvest in their company, and then they borrow more money to reinvest in their companies. That's why I really, really like a company like Palantir that has over $2 billion on their books and virtually no debt and $50 million of gold bullion, amongst over $1 billion in accounts receivable for contracts that they already have signed up, with another $2 billion of contracts that they have possible coming in. They have a lot of money, but that's a different video altogether. I might have actually mixed that up. $2 billion guaranteed with a possible other billion coming in off the top of my head. Whatever. Palantir is good. They got a lot of money and a lot of money coming in. So now that you understand what the first half was, now that you understand what this quarter two is, let's talk about some possible dates besides for quarter two earnings, which is coming at the end of the month, as I said, into the middle of August. You have the CPI data that's going to come in the middle of this month that's going to talk about the consumer price index and inflation, which is going to affect the FOMC meeting that's coming out at the end of July, I believe 26th and 27th. I'm going to film both of those events live on this channel, so definitely rock out with me. Depending on what's going to happen with the CPI data, we're either going to have an inflated CPI, neutral CPI, which it didn't move, or reduced CPI. If we have inflated CPI, God help us all. Like, seriously speaking, I don't even know what to say. If we have neutral, not great. But if somehow, some way, this is going to actually bring down inflation because of all the federal rate hikes that we've already had, this is going to relieve the market just a little bit. And almost certainly the Federal Open Market Committee, when they meet at the end of July, they're going to be raising by 75 basis points. This is already a given. Is this recession, the PE recession, going to happen? Nobody really knows. I think it's going to happen for a lot of companies because a lot of companies that are not profitable and have to loan money are going to get absolutely shellacked. Shellacked. That's what I think. What's going to happen? Let's get some data. Since the beginning of the stock market that we've been tracking, anytime you have a 15+% drop in the first half of the year, it's usually followed by an increase of 24% second half of the year. Now, that statistic is just a statistic, is just an average. It doesn't mean it actually pertains to us. It doesn't mean that it does not pertain to us. But since we're but let's compare it to us. Let's say we're down 21% and not 15%. Let's say we do recover 24% by the end of this year. That means that technically the entire market as a whole will be up 3% at the end of this year. Will that happen? I don't know. Would I like it to happen? Absolutely, I would definitely like it to happen. Guys, this is all data. These are all numbers. I hope you understand what's about to happen in this second half of the year. And again, the past does not necessarily dictate what's happening in the present, which leads us to the future. However, a lot of people don't just want to sit here and do nothing, so they like past data. So I like to give you this past data. I'm guilty of it too. I analyze the ish out of all of this data. That's all I do. I wake up at like 4 in the morning when I got to use the restroom. I'm literally taking a pee and holding my phone, and I'm like, what's going on with the market? Why? This is how invested I am in the market, like most of you guys are. I promised you that I would tell you at the end of the video what I'm doing and what I think is a good strategy. And I'm going to tell you this over and over and over again. First of all, I'm not a financial advisor. I'm purely an entertainer and educator at best. But I will tell you, you cannot time the market. You cannot time the market. All these best investors, they're all full of ish. All of them. Everybody gets lucky, and then they just point to that one lucky play. And several people can get lucky multiple times. But over a long period of time, you got to have sound investing strategy. What is that? DCA, the dip, dollar cost average over a long period of time. Those are two very different things. If you have unlimited funds, well, you play differently. I don't, and a lot of people don't. Invest accordingly every single day over a long period of time. I keep buying Bitcoin at $100 increments every single day. When I compare the price of Bitcoin compared to the price that I'm buying in over the course of $100 every single day, I actually am buying at a better price every single time I check the price of Bitcoin. Why? I am dollar cost averaging, not the dip, just dollar cost averaging. So if the price goes up, I'm good. And if the price goes down, I'm good because I'm going to buy every single day. I'm just using Bitcoin as an example. You can do the same thing with stocks. I actually started doing a very similar thing with Nvidia, Unity, Tesla, and Palantir. Every single day I'm buying a very small amount. Now it is a very minuscule small amount. Why? I want to make videos to show people that if you dollar cost average over a long period of time, you're probably going to do well in the market as long as your funds don't run out. Whatever's good for me doesn't mean it's good for you. And I'm just going to leave you at this. You can never time the market. And I'm not telling you to go all in. I'm not telling you to buy. I'm not telling you to sell. I'm not telling you to sit on the sidelines. I'm just giving you the raw, hardcore data that anybody can interpret any which way they want. At the end of the day, do your own research. And I don't mean that to be like condescending. I'm telling you the truth. Do your research. The point of this channel, the point of YouTube, the point of all of this is for you to literally go on Google and start searching articles. Look at balance sheets. Look at CEOs. Look at companies. Do they owe money? Do they not owe money? Do they have contracts? What do they do? So on and so forth. So many people are investing and have no idea what the hell they're investing in, not even in the slightest bit. Now, we can't all be Tom Nashes and know everything about everything, and we can't all have perfect hair like Amit, but it's okay. We play the cards that we are dealt in life, and we could still do a little bit of research and learn a couple of things. Thank you.